This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Saudi Aramco has notified at least 3 North Asian buyers that it will supply full contractual volumes of crude in October, sources with knowledge of the matter said on Monday. The world's top oil exporter has slashed its official selling prices, OSPs, to Asian buyers for the month, the first reduction in 4 months. The price cut was overall in line with the market expectation as the spot premiums for the Middle Eastern crude dipped since mid-August amid an increasing number of arbitrage cargoes flowing into Asia.
Oil prices rose on Monday as Iranian nuclear talks appeared to hit obstacles and an embargo on Russian oil shipments loomed, with tight supply struggling to meet still robust demand. Brent crude futures rose 63 cents, or 0.7%, to $93.47 a barrel by 12:26 GMT. U.S. West Texas Intermediate crude was up 42 cents, or 0.5%, at $87.21. Prices were little changed last week as gains from a nominal supply cut by the Organization of the Petroleum Exporting Countries and Allies including Russia, a group known as OPEC+, were offset by lockdowns in top crude importer China.
Moving on to the top news in the energy sector.
Indonesian President Joko Widodo is considering joining India and China in buying Russian oil to offset increasing pressure of rising energy costs, the Financial Times reported on Monday. We always monitor all of the options. If there is the country, and they give a better price, of course, Widodo said in an interview with the Financial Times when he was asked whether Indonesia would buy oil from Russia. Earlier this month, Widodo hiked subsidized fuel prices by 30% and said that the price hike was his last option, due to fiscal pressures, sparking protests across the nation of 270 million people.
Fossil fuel firms may have to share their excess profits to help European households and industries cope with red-hot energy bills, a draft European Union plan showed on Monday as the cost of the West's energy war with Russia took a growing toll. Energy prices and inflation have surged as Moscow slashed gas supplies in response to Western sanctions imposed over its actions in Ukraine, prompting France to tell consumers they would have to share some of the pain while Britain is among countries facing the threat of recession. The draft European Commission proposal, which is expected to be unveiled this week, would see the 27 EU countries introduce a solidarity contribution for the fossil fuel industry.
Next, we have the top news in metal markets.
Gold jumped 1% on Monday, bolstered by a weaker dollar, while investors positioned for key inflation data as they assess the pace of future interest rate hikes by the U.S. Central Bank. Spot gold rose 0.6% to $1,726.39 per ounce by 13:59 GMT, after rising to its highest since August 30 at $1,733.69. U.S. gold futures gained 0.5% to $1,737.20. European central bank officials have signaled further rate hikes to rein in inflation, which has supported the euro and pressured the US dollar and is in part responsible for some strength in the gold market, said David Megger, director of metals trading at High Ridge Futures.
Copper prices rose on Monday, supported by a weaker dollar while the market awaited data from top consumer China for a better steer on demand prospects. Benchmark copper on the London Metal Exchange, LME, traded 1.1% up at $7,943 a ton in official rings. The dollar has retreated against a basket of other currencies since reaching 20-year highs last week. A weaker U.S. currency makes dollar-priced metals cheaper for buyers holding other currencies. The base metals complex has been supported by the weaker dollar this morning, said Sucton financial analyst Jordy Wilkes, adding that U.S. inflation data this week will help to shed light on Federal Reserve policy intentions. We will now look at the top news in the agricultural sector. Russian wheat export prices rose last week with global benchmarks and demand from importers, the IKAR agriculture consultancy said on Monday. Russian prices for wheat with 12.5% protein content and for supply from Black Sea ports rose by $2 to $312 a ton free on board. FOB. At the end of last week, IKAR said in a note. Russia exported 640,000 tons of grain last week, down from 760,000 tons the previous week, fellow consultancy Sovcon said, citing port data. Sovcon expects Russian grain exports to grow to 4.95 million tons in September, up from 4.20 million in August.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.